Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Fred Thiel. He's the CEO of Marathon Digital Holdings, a Nasdaq-listed company, to discuss the future of Bitcoin mining. Fred, it's great to have you with us. Welcome to Trade Talks.
Great to be here.
How are investor and regulator sentiment changing when it comes to Bitcoin?
Well, I think Bitcoin, as the market of cryptos, has really gone through its regulatory set of hurdles and is now viewed both by the IRS, Department of Treasury, banks, et cetera, as an asset. It's a store of value. It's definitely not considered a security or anything like that. And so I think Bitcoin has gone through that gamut, if you would, of regulatory issues. I think regulators today are much more focused on stable coins and exchanges and things that touch consumers that they believe are a stability risk. And as a matter of fact, I believe the Biden administration put out a report today to that fact, where they view there's certain risk with cryptos, but primarily it's around stable coins.
Does North America have the potential for becoming a hub for Bitcoin mining?
Absolutely. I think after the China shutdown, where ostensibly over 50% of global Bitcoin mining was done in China prior to the shutdown this summer, we now have the US tracking at about 35%, which is by far the single largest region in the world for Bitcoin mining. And based on power conditions in Europe, the obvious continued shutdown in China, and a lack of attractive large-scale power sources in other countries, the US and North America together, so US and Canada, will continue to grow likely in their dominance of the Bitcoin mining world, starting to approach somewhere near high 40%, possibly 50%. By the end of next year.
You know, it's like Bitcoin miners, it seems like a very ubiquitous term. So how do miners differentiate themselves?
Great question. So most miners traditionally look at really doing a combination of being a data hosting provider where they have data centers and they contract directly for power. They mine their own coins, and they also open up capacity for third-party miners to come mine. Our model is very different. We're very focused on partnering directly with the large power companies and with data hosting operators, such that we're able to tie up large blocks of power operating behind the meter. And what I mean by that is most miners in the crypto world today operate data centers that are taking power off the grid, or they're directly on a power plant grounds, if you would. Our model is to be on the power plant ground, take the baseload power that the energy provider provides. And there's all sorts of advantages to that that I won't go into because it takes too long. But essentially, think of it this way: it's a much better return on assets for our shareholders if we don't own data hosting facilities versus owning data hosting facilities.
So Fred, just to expand upon that more. So when we think of big data centers, right, like we use in trading, for Bitcoin mining, does it look like that for those of us who are unfamiliar with how mining works? Is it just a big giant data center? How is it done?
It's actually totally different. In Bitcoin miners need very low sophistication from a data center perspective, and they need huge amounts of airflow. So typically the average Bitcoin mining data center is actually outside. It's a series of 40-foot containers with miners in them. The sides of the containers are open, allowing for maximum airflow, and there's strong ventilation. The other method that's used is large barns, effectively. Think of a large warehouse with all these miners built into the walls with huge fans on one side, essentially extricating all the hot air. Mining is in the process of migrating to immersion, where the miners are actually held in an oil that is non-conductive, that cools the miners, has two advantages: ends up using less energy and generates much less noise. So you can now put these miners in more densely populated areas where otherwise the noise is a challenge. So that's a transition the mining industry is going through, which is yet another reason not to own data centers, because all that CapEx has to constantly change.
So tell us about the Bitcoin Mining Council.
So the Bitcoin Mining Council was really started based on an initiative by Michael Saylor related to the need to combat FUD, fear, uncertainty, and doubt, that was appearing in the media relative to Bitcoin mining. Part of it was that part of what initiated it was a tweet by Elon Musk that, you know, all the carbon being generated by the electricity used by Bitcoin mining. And the Bitcoin Mining Council has essentially collected data from all its members and publishes the aggregate data that shows that essentially Bitcoin miners use carbon neutral energy sources for upwards of 66% of the energy input into what they're doing. So much smaller carbon footprint than what Elon Musk was kind of reporting.
Right. So finally, what does the future of Bitcoin mining and power look like, particularly accelerating the adoption of renewables and stabilizing the grid? Because Fred, it sounds to me that other industries can learn a lot from what we're learning through the Bitcoin mining process.
Absolutely. So by putting Bitcoin mining at the point of power generation, it's the perfect load balancer for the grid. Think of it this way. You have a hot day, the grid needs to provide more electricity because air conditioners are running, people are cooking, they're washing food. The energy generator can simply have an agreement with the Bitcoin miner where we're going to shut down 100 megawatts of your power for 2 hours. And they have a financial arrangement around that. The alternative is demand response, where the grid operator is having to shut down people's air conditioners and clothes dryers, et cetera, intermittently to try and balance the grid. So it has a huge positive impact on the grid to have Bitcoin mining at the point of power generation. And our whole model is very much renewable energy. All of the deployments we're doing going forward here are behind the meter at renewable energy generators. So wind, solar, et cetera.
Right. Wow. Fascinating. All right, Fred, thanks so much for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.